So we are joined right now in the newsroom by a guest who's going to help us parse through all these potential changes of language. Michael, we're so glad to have you. Michael Moran, I should give your full title. I'm so sorry, from Daiwa Securities. Glad to have you with us. So just to what extent is the market paying attention to what Bernanke is going to say?
Oh, very, very closely. We know the economy is starting to do better right now, and we know the Fed sometime in the not-too-distant future is going to be moving on interest rates. They're going to start taking back some of the liquidity that they've provided the market. So everyone is looking to see when all of this is going to happen. They're going to be looking at language very, very carefully to try and figure out exactly when the Fed is going to start moving.
What do you think was, if we could pick any data point from last week that is changing perception right now about where the U.S. economy stands? I mean, is it jobs? Is it the service sector? I mean, what was the most encouraging?
Well, the one that really stands out is the job number that we saw last Friday. It was the first time we had any kind of a meaningful increase in the number of jobs created in the U.S. economy. There were some special factors in there, to be sure, but even if you strip out the special factors,
like
the census figures and the swing in the weather and the weather effect on the numbers, even if you subtract and adjust for all of that, you still would have seen a positive number on jobs. We also saw some very good information on the manufacturing sector of the economy last week. We had the so-called ISM index released, and that gave a very strong reading for the manufacturing sector of the economy.